Hi friends. So today we are going to discuss about a new chapter, spending, saving and borrowing. In this particular video I am going to discuss about spending. We can able to use that one for O level and A level references. Basically I prepared this video only for O level students. So you can able to see that spending. So we can define what do you mean by spending. What do you mean by spending? People spend in order to buy goods and services and to maintain a given standard of living. We can able to say that why we are spending to buy goods and services or to maintain a given standard of living. Standard of living means the quality of life. Okay. Then among the main items involving expenditure are food, clothing, footwear, housing, gas, electricity, water, consumer durable, transport, entertainment, and leisure goods and services. So these are the basic things, basic or main expenditure items. We already know expenditure means how much amount of money you are spending for purchasing goods and services. That is called what? Expenditure or spending. Spending and expenditure we can able to use it simultaneously, no problem, but both are having the same meaning. For example, people spend in order to buy goods and services and maintaining a given standard of living. That is called what? Spending. And so that is very simple things. Don't need to go for so much complicated thinking. Just a simple way we can able to understand. This is called what? Spending. Then influence of spending. This is the most important portion when you are discussing about this particular factor. For example, what are the factors will influence your spending or your expenditure? First one, the disposable income. The disposable income means what? Income after paying taxes. Okay. Plus the state benefits you receive that you have to be added. That will be considered as what? Disposable income. The income after taxes has been deducted and state benefits received that you have to be added. So total income you received minus the tax you have paid. Then you will be get a disposable income. That means the income available for spending. Positive but less percentage of their income. Actually, income increases, what will happen to the spending? Spending will also increase. So the relationship between disposable income and spending are positive. That means that both will go in the same direction. When income increases, spending will increase. Income reduces, spending will reduce. But less percentage of their income. That is the point. You have to understand that income and spending have a positive relation, but less percentage of their income. For example, whenever your income increases, yes, of course, consumption or a spending will also increases, but at a less percentage or a less proportion. Got the idea? For example, my income increased by 1000, my consumption will increase by 300 or 400, not by 1000, because not at the same proportion. For example, income increased by a 50 percentage, but consumption increased by only a 30 percentage or a 40 percentage. So that time we can able to say that yes, positive relation, but less percentage. Clear? Then second factor which influence spending is wealth. Wealth means we know that it is a stock of assets, including the money held in the bank accounts, shares in the company, government bond, car and property. Wealth generates income, and wealth can be cashed. For example, we can say wealth generates income. Wealth can be cashed in by a security for a loan. It affects the confidence. So these are the things we have to be discussed here. So here we can able to say that what do you mean by wealth? It is a stock of assets. It including money held in the bank, how many amount of deposits you have in the bank, or how many amount of shares you have, or government bonds, or otherwise we can say cars and property. These all things will be considered as a wealth. These all things will generate income, isn't it? For example, bank account, you are having a deposit, you will be get an interest rate, so that is generating income. Shares in the company, you will be get a dividend. Government bonds, you will be get a reward. Then cars and property, it is easily possible to property price and all those things, you can able to sell it and you can get it the money. So wealth can be cashed by, we can able to convert it into cash very easily. For example, I want to be convert my deposit into cash, means just to go to bank and give a check and you can receive the cash like that. Okay, for property means you can sell it and you can get the money. Car means you can sell it and you can get the money. The same way shares, you can sell it and you can get the money. as a security for the loan, and you can able to use this wealth as a security for the loan. For example, I have a property document, so I can mortgage it. For example, therefore, for in order for mortgage, I will give a security assets, collateral assets as a that one. Then I can able to borrow money. Okay, this is security for the loans, and it affects the confidence. For example, consumer confidence. It is influenced mostly by consumer confidence. For example, we can able to say that if you are having a more wealth, for example, more number of Dhonis, lounges, property, car, bike, you will feel that you are very richer. So that your spending habits will increase. You will confident. You are not worried about spending. Why? Because you sure that yes, I have more income now. I have more wealth. I have more assets, so I can spend it, no problem. So I am confident. Why? Because next month I will get a return from that one, so I can purchase it. So like that one feeling you will have. That is called consumer confidence. Then third factor which is affect spending is the rate of interest. A charge for borrowing money and a payment for a lending money inversely related. For example, you can able to say that a charge for borrowing money and a payment for lending money, they both are inversely related. Here to keep in mind that, for example, we can understand that I kept a thousand rupiah in the bank. After 1 month, 2% interest rate means I will be get a 20 rupees as an interest rate. Clear? 2% interest rate now, so I will get after 1 month I will get a 20 rupees as an interest rate. Clear? So that is a reward for that particular deposit. Okay. So it is a interest rate means what? It is a cost of borrowing even. For example, if I am taking a loan, if I borrowed a thousand rupiah from the bank, every month the interest I had to pay 20 rupiah, like that. Clear? So that's why interest rate is called what? Cost of borrowing. Actually, rate of interest and spending is inversely related. Why? Because when the rate of interest is very high, people will try to save more money instead of spending. Okay. And when the rate of interest is very high, people are reluctant to borrow loan or take or borrow money or reluctant to take loans, so that they don't have enough money to spend more. So that what will happen? Spending will reduce. That's what I said, that rate of interest and the spending is inversely related. Disposable income and spending are positively related. Wealth and spending are positively related. Okay. But rate of interest and spending are inversely or negatively related. Then advances in technology. Most of the time in Malay, if I am taking as a Maldives as an example, they have a habit. For example, whenever iPhone updated, for example, from 9 to 10, then they will change from iPhone 9 or for we can sorry, not it's not a 9, iPhone 6s to iPhone 11 Pro. When they release 11 Pro, everyone will change phone to 11 Pro, like that. For example, this is because a new product such as a plasma TV encourage people to replace the existing product. A new TV came that is a very sophisticated, very latest technology, advanced technology. Then all of a sudden, everyone will try to replace it. Clear? So these are the basic factor which is affecting spending. Clear? Okay, then income and consumption. We know that disposable income and consumption we already discussed. It is both are positively related but at a less proportion. Keep in mind. Then people can either spend or save their disposable income, isn't it? Yes, I have some money means I can either spend it or I can save it. People are very poor, they cannot afford to save. Very poor people means they cannot afford to save. For example, they cannot save it. Okay, why? Because they are very poor and they don't have enough money to satisfy the basic necessity. Then, by the necessity to survive, some may have spend more of their income for the necessities. They are said to be a dis-saving. For example, dis-saving means actually they have only less amount of money. In that situation, they will purchase more amount of basic necessities. So that particular situation, they cannot save enough money. That will be considered as dis-saving. For example, consumption is greater than the disposable income. In that situation, how they can able to save? That is not possible to save. They don't have enough money to consume. Then how they can able to save it? Clear? Then, as an income rises, people are able to spend both spend and save more. Whenever your income level increases, they can either save more or they can either spend more. Both are possible. Okay. With the income, that is called what? The proportion spend tend to be fall. We can able to see the proportion is also called what? Average propensity to consume. Whenever the income falls, I told you, when income increases, what will happen? Consumption will also increases, but the proportion will be try to fall. For example, my income increased by 50%, okay, but my consumption increased only by a 30%. In that situation, we will call that what? It is just a less proportion. Proportion is very less. Clear? Then income and consumption proportion. You can able to see it here. The relationship between income and consumption proportion. We will also call it is what? Average propensity to consume. The proportion of income which people spend is sometimes referred as the average propensity to consume. The proportion of money the people is spending. Okay, for example, average propensity to consume is equal to consumption divided by disposable income. Very clear now. Consumption divided by disposable income is called what? Average propensity to consume. This is the most important part. You have to understand that this formula, how to calculate average propensity to consume. Consumption divided by disposable income. What is disposable income? Disposable income means income minus taxes plus state benefit received. Clear? Then income rises, consumption will increases, but at least at a less proportion, means average propensity to consume will fall. You can able to see it here. I am just taking an example. You can able to see it here. Income increase from 100 to 200, 200 to 300, 300 to 400, 400 to 500. Just simply the amount of money you are spending it for purchasing goods and services. That is why I call it consumption. When your income is 100, you spend 120. That means that what? Additional 20 rupiah you either borrowed or you took a loan or something, or from your assets or something like that. Okay. So your income is 100 only, but you are spending 120. Clear? So we can able to say that you are have a proportion you are spending is, we can able to say that 120 divided by 100, that is called what? 1.2. That is called average propensity to consume. Clear? When your income increases from 100 to 200, consumption is also increases, isn't it? From 120 to 200. But average propensity to consume, that means 200 consumption divided by disposable income. 200 divided by 200, that is how much? 1. That means that what happened to the average propensity to consume? It reduces. Clear? Understood? Then you can able to see it here. Average propensity to consume, again you can able to see that income is increased from 200 to 300. What happened to the consumption? Consumption increased from 200 to 270. That means average propensity to consumption is total consumption divided by disposable income. 270 divided by 300. That is equal to how much? 0.9. Clear? Then 320, the total amount of consumption is 320 divided by disposable income, that is 400. That means what? 0.8. Average propensity to consume is 0.8. Okay. Then income again increased from 400 to 500. Consumption increased from 320 to 350. So 350 divided by 500, that is 0.7. So you can able to see that income increases, isn't it? Yes. What happened to the consumption? Consumption is also increasing. But what happened to the proportion, average propensity to consume? It is falling. So that's what I said, that income rises, consumption will also increases, but at a less proportion, means that average propensity to consume is fall. Clear? Then here comes the relationship between income and consumption. That is the most important portion, what we explained already, the relation between income and consumption. You can able to see that here this 45-degree line shows what? Income, disposable income, and this C line is called what? Consumption. You can see that when your income is zero even, you have a consumption. That consumption is called what? Autonomous consumption. That means that we need to consume, isn't it? Whether you have income or not, if you want to survive, means you have to be consuming. So this portion I am saying, you can see it here. The consumption is greater than income. That time it is not possible to save anything. Now that's what we are shading, and we are calling that is a deserving. This is the break-even point. Consumption and income are equal, or we can able to say what? Zero saving. Here there is no saving, zero saving. Okay. And after that, what happened? Income is greater than consumption is here and income is here. So which one is greater? Income is greater. So what you can do, you can save it more. So at a very low level there is a dissaving. You can say that at the very low level there is a dissaving. Dissaving means what? Consumption is greater than the income. Then consumption curve CC starts from the point C in the y-axis. This implies that there is an autonomous consumption, that is called what? C of OC. You can able to see that this OC is what? Autonomous consumption. Even when the national income is zero, even when the national income is zero, people will consume. That's why we are calling that OC amount is autonomous consumption. And we can see that the consumption curve, it is like this, isn't it? So the consumption curve slope is called what? Marginal propensity to consume. The slope of consumption curve is called what? Marginal propensity to consume. That is also you have to keep in mind. Then when income is less than the consumption, when income is less than the consumption is greater and income is less. Okay, income level is less than the OM. We can able to say that OM level. Income level is in this range. What happened? Less than the OM level. The gap is covered by disserving. You can able to say the shaded area is covered by disserving, by utilizing previous saving, or you can able to use it your assets and your previous things and all those things. Then ACOE. Okay, ACOE. Okay, represent dissaving. You can able to see this one. OCE. Okay, this is what I am saying. Okay, OEC. OEC. This portion, shaded portion, is representing dissaving. Okay, then we can able to say that OCE. Then break even point is what? E is the break even point. I told you already, consumption is equal to income, at which point consumption is equal to the national income. At that particular point we can call it that saving is zero. Then at point right of E, any point right side of E is leads to saving. Why? Because the gap between income and consumption, that will be considered as what? That is a positive saving. Clear? So this is the relationship between income and consumption. Then we can go for an activity. You can here, we can able to see it here, the pattern of spending or expenditure. You can able to, here we are discussing about the pattern of spending or expenditure. How the, what is the pattern, what is the style? You can check it here. I am selecting a two group, poor people and a rich people. Two group, I am just selecting poor and rich. Then total disposable income. Poor people will have how much for disposable income? $100, and rich will have $2,000. The amount they spend on consumption expenditure on food and clothing, basic expenditure on food and clothing, the basic necessity, we will consider as a basic necessity. From here, $100, he used to spend $40 for consumption. That means that he is spend a 40%. Proportion is how much? Average propensity to consume is 0.4. That means 40% of his total income he is spending for consumption expenditure on food and clothing, on basic necessities. Clear? In the case of rich, he is having a $2,000 and he is spending how much? $400. That means that what he is spending a 20% of his income. That means average propensity to consume is how much? 0.2. So here I am saying, explaining the pattern. The poor may spend a higher proportion. Who is spending higher proportion? Rich or poor? Poor is spending higher proportion, 40%. Rich is spending how much proportion only? 20% only. Clear? Who is spending more proportion of money on food and clothing and basic necessities? The poor person will spend a more proportion of money on food, clothing and basic necessities. But rich may spend more money. In income total, we can able to say who is spending in money terms, who is spending more? Tell me, rich or poor? Rich is spending. He is spending $400. And the rich is spending only how much? Only $40. So in money terms, who is spending more? The rich is spending more. But in the case of proportion, who is spending more? Poor people is spending more on the basic necessities. Clear? So that pattern is clear. Then next, the pattern of spending on expenditure. I am just saying the same people, rich and poor people. Disposable income is $100 and $2,000. But here I am saying, instead of basic necessity, I am taking here expenditure on luxury, entertainment, consumer durable and services. Okay, luxury items. Like we can able to say that car, jewelry, foreign trips, like that kind of things. You can able to see that the rich will spend more, both in total and as a proportion on the luxury items. For example, you can able to say that who is spending more proportion? Rich is spending more proportion on the jewelry, car, foreign trips. Total money terms, even who is spending more? The rich only is spending more. Proportion and spending wise, both who is spending more? Rich will spending more on the luxury, entertainment, and durable consumer durable and services like home appliances and like that kind of things. This differences in spending pattern also occurs between the countries. Actually, countries also we can divide like rich countries and poor countries, like underdeveloped country and developed countries. So underdeveloped countries try to spend more on food, clothing, like kind of basic necessities, and developed countries will try to spend more on the sophisticated development technologies like a laptop, MacBook, like that kind of stuff. Clear? So that's what we are saying, luxury items. Then the pattern of spending and expenditure, it will be different in different groups, even income groups. You can have to say within the group, in for example rich people, even there's a different style will be there. For example, two rich people, you are taking two group, one rich group and another one rich group, but one rich group spending differently than the other. How? You can see it here. Spending pattern vary within the income groups in a country according to the differences in the household consumption, taste, and age. One is taste and the ages. This is the basic stuff which is making pattern different. For example, household without children are likely to spend a higher proportion on the recreation, eating out than the household with the children. Those who are having more children, they will not go for regularly going for outing, eating outside from the restaurant and all, because it is so expensive. So they will be try to avoid it. But those house without children, they used to go because the number of family size is very less, so it is less expensive. So they used to go. That is the one way. Then some household may value cultural activities more than the others. For example, some will be spend more money on the cultural activities than the others. Others may not be go to interested in those kind of things. Then while others may keen or stronger to spend more on the medical care, others will spend more money on the medical care, like that kind of activity. It is based on that particular income groups, their taste and preferences. Then retired tend to spend more on the medical care than the transport and entertainment. Isn't it? The retired people, the old age people will try to spend more money on the hospital and those kind of things. People in their late teens and 20s are often spend higher proportion on the clothing and entertainment. Most probably we knows that those who are with the teenage and 20s, that means we can say 21, 22, like that kind of categories, they try to spend more on entertainment, like you guys, clothing and entertainment, fashion, trend, like that kind they will spend. So these all things are the pattern of spending. Okay. Then an activity, you can able to see that in page number 138 of chapter 17 on IGCSE economics textbook. You can see an activity. The table shows how people spend their disposable income. Place in the three people in the most likely order of disposable income from rich to poor. They given some category: food, clothing, consumer durables, leisure goods and services. Who is spending more on leisure goods and services? The rich is more. So you can see that here 40. That means what? Yeah, person C is very rich. Clear? Who will spend more on food and clothing? That will be very poor, isn't it? For example, you can see it here. He is very poor. Okay, and we can able to see that, but you can able to see that that person is spending very less. Person C is spending very less on consumption, and person B is spending more on consumption. We can able to see that person B is spending more on consumption. That means the person B is very poor, and this one is moderately poor. We can able to see that. So based on that, when you are arranging from the rich to poor, who is the more rich? Yeah, this person C is very rich because he is spending more on leisure activities and less on food, isn't it? That means that he is very rich. And person A, he is spending even more. For example, we can have the leisure activities also 30. That means okay, little bit developed there, and food also comparatively higher than the person B now. So we can able to say that okay, we can able to say that this person is after C, person A will come because he is spending less on the food and clothing. You can able to see here who is spending more on food and clothing. That means person B. That person B is very poor than person A. Clear? That's why I got order that CAB. The rich spend more percentage of funds on the consumer durables and leisure goods and services, while the poor spend a higher proportion on the food and the clothing. Clear? You have to write it. This is on your answer book. You have to copy this table and question and you have to write it. Okay. So, thank you.